Okay, so I restarted the video. You only lost maybe 3 or 4 seconds of the time there, so not you didn't miss anything. But like I said, if you're playing, 3, 4 weeks out on expiration, yeah, you can, you know, go tie your dog out or something, go grab a drink, and usually be okay. I still don't like doing it, but I try not to leave my desk when I'm in a trade. Um, but you definitely don't want to do it with Monday's expiration 2 days out. They move. You see, we've already moved from. I think the low was a dollar. It was $1.06, and the highest we've been is $1.21. So that's pretty big. Oh, okay, we're right there. I'm going to sell three of them here at $1.25 because we're at that 279.20 mark. So if I can get out of three of them, and there's okay, it hasn't actually triggered, but you see it crossed there. Now it triggered. So I'm out of three. I have two left. So I'll be looking to sell one, and we actually did hit the 279.30, which is a pre-market high. So we've got up to 127. Might sell the other one at about $1.28. Let's see if we break above it or if we start to hesitate here. And I can do this. I'm not going to talk about what I pay in fees and commissions, but I'm a pretty active trader in my real money account. I don't pay a flat fee for trades. I only pay per contract when I'm trading options, so it doesn't matter if I sell all five at once or if I sell one at a time. I still pay the same amount. Um, I know the base fee structure and it's not just TD Ameritrade. It's the same with E-Trade or anybody. The base fee structure is you pay a certain price per trade plus commissions on per contract. So if I wanted to sell one contract at a time and I had to pay that base fee, I couldn't afford to do it. It would cost me more, and it would cost me more to do that than I would make on the trade. Uh, I would have to buy and sell all at once. Uh, even that adding that one when I did when we got down to lows. Okay, we were getting a little bit of a breakout. I'm going to sell one more to $1.32 here. Put an order in, see if I get filled. And right now my stop out for these would be break even. If we drop back down to that $1.15, I'm going to sell both of them and get out. So I have an order in right now to sell one of them at $1.32, which we actually hit. You see, we did have a trade here at $1.32. See if we can pop back up there. The pre-market high was 279.30, so we did break that, and we're above yesterday's close, which is a pretty significant resistance. So slow stochastics are still pointing up. The 10 minutes just starting to cross up now. So let's see if we can get back up there. Like I said, as long as I keep my stop at break even on these other two, there's no way I'm going to lose money now. At a minimum, I'll make $30. Like I said before, base hits. Sure, I could have sold all five of them at $1.25 and made $50 and been done. But and there's nothing wrong with that. I've often done it. Sometimes I'm busy and I have a meeting coming up or I have something going on and I don't want to sit and babysit it for too long. I'll just let a couple of them go and get out, or let them all go and get out. But we get back up there. Hopefully, trigger that $1.32. I may lower that to $1.30 now. I actually wasn't really watching it. I might not have got out anyway, but we were at $1.32 and I happened to notice it. We're a little bit above the pre-market high, which was my planned exit for the next one. So I'm going to go ahead and cancel this and set this back at 2 because we're getting pretty close to break even. And I want to hit this sell market to get out of both of them if we go down to break even. Remember, my break even's $1.15, and I'm going to be selling, when I do a market sell, it's going to be selling on the bid. So when I see that bid hit $1.15, I'm hitting this button. And I certainly don't like that real long wick on this candle. Even if the candle closes green, I still don't like that long wick. So let's see. It's not quite a shooting star, but it is a long wick. See if we can get back up and break yesterday's close again. Get a little bit more volume. You see, we have some increasing volume. Volume's getting a little bit higher each candle, which is good and actually kind of odd. We don't usually get increasing volume right at the open. Usually our first candles are biggest, and they start going down from there for the first maybe half hour, 45 minutes, because that's when all the action is. And that's why you get so much volatility at the open. You have so much volume at the open that it'll jump around a lot on you. If you get it right, it's great. Good way to hurry up and quickly make some money, get in and out. But if you don't get it right, it's a way to quickly lose money. So you have to be pretty confident in it. Paper trade it for a while. This is obviously a paper trade here. I would have done it with my real account, but I don't know. I can't get the volume on the mic to work on my other computer. I could open that account up on this one, but I don't know. There's a lot of news out this morning, so I don't know that I would have traded the open with my real money account. I'm a little bit more conservative when it comes to real money. I might have just sat on my hands for a little bit because we had some news coming out this morning. Forget we have I think PMI numbers and I don't remember what it was. I looked this morning. I subscribe to Seeking Alpha. I don't read Seeking Alpha articles, but at the bottom of their email they have a listing of all the news items for the day and what time they happen, and that's what I use it for. I glance at it every morning. I scroll down through. I do look at the headlines of the articles, the little snippets they have, just to see if there's anything that really stands out. But I don't click on them and read them. It's not, to me, Seeking Alpha is not very reliable when it comes to that stuff. But I don't like to follow news stuff. I like to trade on technicals, but news always trumps charts. So if you have a news item coming out, especially earnings or something, I won't trade anything. If Apple has earnings, I'm not trading it that day. We're getting real close to my stop out here. When that bid sees 115, see if we hold it. So we get back up there. Come on. The buyers come in here. Need to get back up above yesterday's close. That's a key. Need to get above it and close above it. Like that right now is what's holding us down. That and pre-market high. But pre-market high, I don't think it weighs as heavily as yesterday's close does. If we close above yesterday's close, I don't think we'll have any problem getting above the pre-market highs. So yesterday's close is the key that I'm looking at. Definitely need to get above it and close above it. Need to hold that level. I think I'll put my sell order for the next contract at about $1.30, but I'm not ready to set it yet. I'm going to wait until we get above that close. You see we're at about $1.21 right now. And if I have to, this trade's taking longer than usual. Kind of trading in a fairly tight range here, but if I have to, I'll stop the video and restart it again so we don't miss it. And we'll have 3 videos up today just for the opening trade, but I think it'll be worth it. I think it's. I know when I started out, and even now, every once in a while I'll watch one, but there are some guys on YouTube that would record their actual trades live. I thought it was kind of cool watching that, especially if you have a losing streak. If I had a losing streak, I'd go watch somebody on their YouTube. I'd watch their live trade just to see what they did, and just to you want to have that winning mindset. If you don't have a winning mindset, you're going to struggle. It's going to make it harder. So you definitely want to have a winning mindset. So even if it's not you that's winning, it's good to watch a winning trade, and I don't know, just mentally. That's the hardest thing about stock trading, is the mentality. You could have 5 good trades in a row and 1 bad trade, and you're down in the dumps. Then you start questioning, why did I do that? Why did I do this? So it's good to watch some good trades. And I also, I know some people might disagree, but when I'm trading, I don't want to watch somebody else trade, because I tend to, if they say, well, I don't like this, then I start second guessing myself, and am I doing the right thing, or should I not be doing what I'm doing? I found usually if I follow my gut and my instinct, it works out better for me. You see we're pulling back down now. You see the 20 exponential, or actually the 10 exponential moving average right here, the green line. The white one is the 3 exponential moving average line. The green one is, see the 3 there, and the 10 here. You see they're kind of acting as support right now, and hopefully it holds it. The 3's going to bounce around a lot. You're going to get a lot of movement on the 3. The 10 will hold a little bit better. So let's see if that 10 holds, which is right about where my stop out would be. So we're getting real close to that stop out, and we have a bearish engulfing candle forming. So I'm likely going to stop out of these two. We're at $1.14 now. So each penny would be $1 for me, or $2 actually, because I have 2 contracts. But if we can hold that, it's not looking too good. I don't like that bearish engulfing candle, and the slow stochastics are starting to curl down. So I'm about to hit that stop button, hit that sell market button. You know what? Let's see if we hold that 279 mark. There's the 100 simple moving average lines right at 279, and 279 itself would act as support, mental support. So let's see if we can hold that. Probably gonna have to stop this video, but I'm hoping to get a bounce back up before I have to do that. Let me go ahead and stop this video and start it again. Let's see. Yeah, I'm not liking this on the 3, the 5, or the 10-minute chart. I'm not liking what I'm seeing here. Let me go ahead and stop and start again.